Good morning, afternoon, or evening, ladies and gentlemen. All in crypto here, and welcome back, guys, for another daily cryptocurrency market update. The market, certainly the crypto market, is having a brutal day thus far. And this is before you guys, I think, are going to get this video half an hour. It comes out at 1 o'clock, 1 p.m. UK time. This is going to be half an hour, or this video is going to be out half an hour before the CPI today for the United States, which is set to show inflation. The forecast is that it's come down by 0.1%. Still a very unacceptable number for inflation. In actual fact, we got some news this morning. Wholesale price rose 0.5% in September, more than expected as inflation persists. So it's looking like actually potentially inflation's probably going to come out above this. And this is why markets are selling off and have been selling off this week in expectation of this. This means the Fed are going to have to continue. It wouldn't be a surprise if the ECB hikes rates above 3%, says Belgian central bank chief. You know, they need to try. We've been trying so hard every single day on this channel to make sure you guys are prepared for this. And everybody that is with me, certainly in my community, is, you know, and it's not over yet, guys. If the results of what we've seen from central bank action has been the markets have capitulated to where they are today, there's more of that to come. It's that simple, guys. It's all about liquidity. We had Janet Yellen coming out this morning and going, remember, the key word here is liquidity, money. I'm worried about liquidity for treasuries, meaning that, you know, we're seeing bond markets collapse across the board. We're seeing currency itself come into question. And in a kind of time period like the one that we're in, you do not want to be a buyer of risk assets. There will come a time for that, but that's when the conditions have largely changed. And the thing is, one comment that I constantly get is, oh, well, you know, everybody's calling for further downside and continuation. Yeah, they're calling for that now. Back in June, they were calling for this is the bottom and we're going to the moon. You know, now they're going, well, okay, they've missed that boat. And the problem is, because they've now flipped their biases now, there's a rush to the exit. We still haven't seen that real rush to the exit that I think is taking us down. And you guys know that we've got targets at 13,800 just yet. But it is on the horizon. We've been watching the Bollinger Bands, and we've been watching, and we posted on our Twitter yesterday. For those of you that aren't following me on Twitter, guys, well worth a follow, at Real All In Crypto. You can see that just like prior to every other spill that we've had from 69K, you get a sort of compression of these Bollinger Bands. And it's my opinion that you are in for similar price action to what we had over here. Similar price action to what we had here. Can you see this constricting of the Bollinger Bands? Can you see this? Just prior to a spill. Again over here. Ignore the head and shoulders, guys. Here. Can you see how you get this compression and then you get a break that really sets the momentum? And this is going to be downside momentum, guys. This is before we've even had the CPI. That is telling me that the CPI is probably actually going to come out above forecast. I don't know what it is yet. You guys will know that this video is currently 20 to 12. So 11:40 a.m. in the UK. You can see we haven't actually had the CPI print yet, but the forecast is coming at 8.2. I'm going to guess that it's going to come out hotter than expected. Be careful, it's going to be volatile, but the likelihood is, and what you tend to get with these sort of economic data events, is people will hedge to what side they think it's going to go, which is why I think we've seen markets sell off thus far in preparation for potentially a bad number. And then when that number takes place, they'll add, you know, maybe they put 80% in and they add the extra 20% after. So actually, we're probably going to be in for a bit of a brutal day. Crypto's really selling off more than anything. The futures market isn't doing a lot. It's marginally in the green. The UK FTSE is 0.7% up. Gold's up. And the dollar's pulling back. Now, this is interesting because we know the correlation. We can get rid of the Bollinger Bands now with Bitcoin and the dollar. Now, we may end up in a situation where the dollar may actually have a pullback as it's running into this key area of resistance. And Bitcoin may actually not benefit from that because you've still got this kind of deleveraging going on. The real dangerous thing about where Bitcoin currently is, you know, and we've kind of likened what we're currently doing to prior areas of consolidation before that continuation. The problem is once you come and start getting into this range, you're going to hit so many stocks and so much liquidity that has been built up here that it is going to be the very propellant that takes you to our target of 13,800. We could still be wrong. There's still that bias. Okay, maybe we get an amazing CPI number. Maybe it comes out at 6 or 7 or whatever it may be, which is still high inflation, which is still wealth destructive. But markets would probably appreciate that. The issue is, what have markets done going into it? With the kind of murmurs that we're getting that it's going to be a bad report, this is all going to see that further continuation to the downside. It's not a good time to be investing in crypto. It's why we've not been. It's why we've been telling you guys, even though I'm not a financial advisor and nothing that I say or do on this channel isn't financial advice. I'm just somebody that cares and that is disgusted at the sort of caliber of crypto Twitter and crypto YouTube out there. We've been saying, look, don't be invested, guys. That there's serious risk on the table. Even just taking things at face value without any kind of external risk catalysts, like what's going on elsewhere. The kind of macroeconomic situation in terms of interest rate hiking and inflation is extremely liquidity destructive. And like I say, Yellen came out this morning and said, or last night, sorry, I should say, and said, look, I'm seriously worried about the liquidity for the bond market, or the treasury, sorry. And remember, the bond market, the treasury market is fundamental to financial stability. If they go kaput, it's not going to be a good time at all. We're also seeing yields continue to climb. This shows also distrust in the bond market. It's going to be a very interesting day. We're going to be watching the CPI print like a hawk. We're already positioned partly, and we'll likely add the rest of those positions on. Our bias is that we really are looking at downside, and we actually saw a massive Bitcoin bullish channel, rather pathetically, finally coming out and saying, look, where we are today is essentially where we were just before we had that final leg down of the bear market back in March 2020. Sorry, not March 2020, November 2018. So we're in this kind of consolidation ledge period, and we're about to fall off it, in my opinion. Just my opinion, could be totally wrong. And that's really what we have for you on the price. We're largely repeating ourselves, and I understand that it's kind of in some ways like Groundhog Day, but it's so important that people understand this. We really are trying to give direction on a daily basis and keep people on the right side of this market, because it is ugly. Welcome for those of you that are new to the crypto space to a bear market. Feels very much like 2018. It feels worse in some ways because of everything else going on. But in terms of the sentiment, it feels very much the same. And it's really when the tide sort of goes out. Everybody was a genius, including myself, from March 2020 onwards. But the government literally printed $7 trillion worth of fiat in the US, and they did it all over the world. You don't have to be a genius to try and guess what way markets are going when they do that. We're separating the boys from the men here, guys. If you can make money in this kind of a market, you're doing well. Whereas most of them can't. There's that video out there, Dave Portnoy, I think. Not really familiar with him, where, he's talking about how much of a genius he is and how he's better than all these Wall Street traders and stuff like this. And then we enter this year and the conditions obviously change and people don't tend to do so well. That isn't a hit on him at all. I'm not familiar with the guy's work. Just a kind of funny video that's floating around that I really think captures the difference between this year and the two prior, when we have, it's all liquidity based. It's why we continue to mention it to you. We've also gave videos literally a couple of days ago saying we think Atom's going back to $5. We think everything is going to get hit. We even think things like gold and silver are going to get hit. Stocks are going to see further continuation to the downside. This was another article. Further 20% fall in US stocks. Certainly possible, says the IMF director. Absolutely. This is what we're waiting for, in fact, to be honest. We are waiting for the stock market, hasn't really sold off that much. In my opinion, we're here. This is what we've put in so far. We've got the real shocker and the spiller to come. That's what I believe. I think that in actual fact, what you're likely going to see is a lot of, markets went up over the last 2 years in the manner they did simply because of all the printing. Well, that printing and that sort of the tightening of monetary policy, going from it being extremely loose, is now being done at an extreme rate. Once you start, and now you're putting in, this is a clear downtrend. Lower lows and lower highs. Yet we've had lots and lots of people in that comment where people say, oh, well, everyone's bearish. Yeah, they are now. A blind man could see it. The thing is for me is I'm kind of in this kind of annoying zone because I don't want to be on the side of everybody or what's deemed everybody. By the way, when you talk about everybody, there's still a massive amount of retail hodlers out there that still, in my opinion, need to get washed. And this is how things work, guys. You know, at the top, it's majority retail. And at the bottom, that's when you'll see your institutions and everybody sort of buy and step in. But this is what we're looking for. We're looking for the sort of reality that this is a recession. The Fed no longer has your back and things are going to get worse. Remember, markets have only gone up since 2008. Most investors haven't had to deal with this kind of a time period because they've been so used to buying the dip, buying the dip, buying the dip. And the reason they've been able to do that is because the Fed have your back. They no longer have your back. They're willing to let you fall and crack your head open. And that's what's going on right now, ladies and gentlemen. This is not, it's hard to be a sort of market commentator in these kind of conditions because lots of people are looking to vent, you know, bring it on. You know, this is why, you know, if you put public content out there, you should expect what comes with it. Doesn't bother me in the slightest. But really what we're trying to do here, and people say it's doom and gloom, it's depressing. If you can't deal with it, then maybe this isn't the channel for you. You're only going to get real, informative, useful, educational information on this channel, guys. You're not going to get Moonboy hopium. All the Moonboys have now flipped bearish. You know, it makes me want to buy just out of spite. But we won't because we still think downside's coming and very much on the cards. And you're still going to get your big channels out there that have been so wrong. And like I say, everyone's a genius when the Fed print, you know, $7 trillion worth of value, including myself. But you're still going to get, you know, if we do have another rest period, you'll probably get bottom callers again, and they'll likely continue to be wrong. And eventually they'll be right. And this is how things go, you know. The bottom will come eventually, but there's a lot of destruction that has to take place. You know, they've got to take a lot of money off a lot of people. Yes, crypto's getting hit very hard. Stock market hasn't been hit as hard. You've got things like the housing market, which is only just starting to really see the crack show up. That's still got to roll, in my opinion, and see that downside. We got to have a haircut there. And you'll go, nah, housing doesn't get a haircut. Over a long enough time horizon, maybe. But in the short term, what are we seeing with mortgages and mortgage interest? People don't want to take out a mortgage when rates are this high. And rates are set to continue to go higher. That is all you need to know. And today's data is really going to enforce that, in my opinion. They also have a strong labour market that they're going to use to, you know, continue to sort of... And it's natural we have a strong labour market when you know, people were closing down and March 2020 caused everyone to sort of shut down and go home. It's natural we're going to have that strong labour market. That's set to continue. This was another interesting thing to really sort of press the severity of the situation. Strikes, possible blackouts, and a plunging currency. Brits are being hit by a wave of bad news. We aren't. We're all in dollars. And I'm British. And my British followers are probably in the same boat that I am. We've been largely US dollar stable coins for a long time now. We're going to continue that bias and rhetoric moving forward because we understand what's driving the dollar. We understand that it's, again, all these bad conditions that we're seeing are set to continue. And you've got these kind of politicians that are playing dumb. Are politicians and the government really that thick and central banks really that thick? I would argue that they're not. They're just playing dumb. You know? And it's a sort of blame game. Because you can't be that thick. How can, you know, a 20-something year old be able to tell you the you know, the sort of issues before your central banks can? It's been a real 2+ years where I think many people out there are waking up to the sort of scam that central banks run. You know, not just people like myself in crypto. That's one reason we got into crypto, is because we knew what a farce the Federal Reserve were, etc., etc. But waking up not just in regards to the sort of central banks, but also the government themselves. You know, people are now going, that doesn't make sense. Why did we do that? Interesting stuff. Very interesting time to be alive. There's going to be some amazing opportunities, and to sort of leave you guys on a high note before we do a bit of recapping. The biggest opportunity of our lifetimes is upon us. And you get to either choose to sit there and do nothing, or you get to choose to build generational wealth for you and your family. I believe that opportunity is close. And you can be with me on it, or you can choose to do nothing. You don't just need to be with me. I'm sure there's other good channels out there. We speak to a lot of them. But the vast majority, and I want to say this again and really impress this, vast majority of YouTubers and people on crypto Twitter that talk about crypto and think they know what they're on about, they don't. And I don't know what I'm on about half the time, but we make money, and that's, you know, how you kind of weigh up success in this game, I'm afraid. That is all I've got for you in this video. Quick recap. It's CPI today. We're telling you that it's going to be a bad number. We've already got the producer price index, which actually saw a rise of 0.4 in terms of prices. This is going to trickle down into the CPI. Maybe something comes out lower, but even if it comes out as forecast, it's really bad, guys. 8.2 shows that the Federal Reserve is basically doing not a lot, and they're going to need to really crank up the heat in terms of, you know, killing off demand in order to fight this runaway, scary, horrific inflation, which is also very wealth destructive for the masses. That is all I've got for you in terms of TA. We've told you, you know, we think small downside. I think it's very, very likely. Could be wrong, just don't think we are. And we've been right so far, certainly from sort of 44K onwards. So that's it, guys. Enjoy your Thursday. Hopefully this wasn't too depressing. It's not trying to be. I'm just trying to give you the truth, let you guys know exactly what's going on or what isn't. I'm going to love and leave you. If you've enjoyed the content, like, always appreciate it. So comment. See you in the next YouTube video.